Hello everybody, welcome back to the channel. Thank you for checking us out. Today I wanted to go over some of the earnings that we've already heard about. We've had a lot of big tech give their earnings and I kind of wanted to go over them. As you can see right here, you can see that on Wednesday we had a very mixed day. You had the Dow up, the S&P down, and the Nasdaq down. The Nasdaq taking the biggest dive. The reason because of that is because of big tech, right? On Tuesday, we had Microsoft and Google report, and both of them kind of gave disappointing earnings. And then on Wednesday, you had Facebook, Meta. They came out with their earnings, and their earnings weren't so hot as well. So I kind of wanted to take a deep dive into those, kind of give you guys some information about how they're going, my thoughts on them, and things like that. So I really appreciate it if you guys would take a look, and here we go. So the first start of all, we got Google, or Alphabet, better yet. They had the first ring of the bell when it came to Tuesday after the bell. And as you can see, as you can read from the headline, that they did miss their earnings. So they missed on their earnings, but the biggest one was YouTube shrinking. Now, when we take a deep dive into this, you can see they missed their expectations on the bottom and top line. So they missed on revenue as well as earnings. And they had a decline in YouTube by 3%. When we take a deeper dive into the numbers, we can see a couple of things. A, earnings per share, the expectation was 1.25, but they did 1.06. So that's a little small miss. Revenue, they did 69 billion versus 70 billion what was expected. So they missed on that as well. YouTube advertisement went down. Their expectations, they missed on that from 7.07 versus 7.42. So they missed on that as well. Google Cloud was the biggest win, was almost the only win. As you can see, they went from 6.9 versus 6.69. So they did do a beat for Google Cloud, and the Google Cloud revenue is growing at a very decent rate. Year prior to that, they did 5 million in revenue, 5 billion, I'm sorry, in revenue compared to 6.9 revenue now. So they are growing that business very well. You can see the traffic was down as well. Per the traffic per user, you got 11.83 versus 12.38. So as you can see, Google had a very tough quarter. One of the key reasons for this is because of the is not really an, is because of inflation really, but the main thing is a lot of advertisers aren't really advertising right now, right? A lot of that money that they would normally get to advertisement, companies are doing that because of inflation, because of what's going on. There's talks of a recession around the corner, so there's a lot of going on. That's more companies are trying to hold on to their money versus advertise at a high rate that they normally do. We kind of got a glimpse already of this last week with Snapchat, right? Snap reported and they had earnings as well that showed the advertising rates were down. So you're going to see a trend that advertising rates are down as a sneak peek. Facebook was down because of this as well. So the ad revenue isn't as good as it normally is. But overall, Google had a struggling quarter, but it's Google. Google's doing is a fantastic company. They're a growing business still. They did shrink a lot. Their only revenue only grew by 6% compared to like 41% a year earlier. So their revenue did go down. But something to keep in mind, that 41% was going off of the pandemic, right? That was going off of 2020 numbers when a lot of companies took a big nosedive and then kind of rebounded in 2021. So that is something to keep in mind that they only grew by 6% compared to prior year, but that was at a really big jump because of COVID going on. Now, when we look at how the company did, you can see that they are now officially under $100. So Google is trading at $95 right now, and you can see that they took a 9% dip on those earnings. That's one of the biggest drops I have ever seen in Google. Usually stable companies like, Apple's, Google's, Microsoft, they normally don't do big dips like that. So you got a very big dip with a 9% dip in Google. That's something that you normally don't see. But you can see that is making more even more attractive, right? Look at your PE ratio, the trailing PE ratio, as you can see, now it's down to 17. So as you can see, that is becoming even more affordable, even more value added to that. And keep it in mind, the market is currently at like a 24. So when you see that Google is cheaper than the market, Google is cheaper than the market. We're talking about one of the biggest companies in the world, billions of dollars, trillions of dollars, and they are cheaper currently than the market, sitting at their 52-week low, sitting right around their 52-week low. So I think Google's a fantastic company. I think what they're doing and their business is going to be good. When you think about a company, one thing I like to always ask myself is this company going to be here 10 years from now? Is this company going to be here 10 years from now? If that's a if that's a yes, then that's a check mark. And also, is this company going to be bigger than it is now 10 years from now? And I think Google is going to be one of those companies that what they have already done is change the world. So Google's took a big dive today. Um, they're going lower. Big tech is down, but I think Google is a fantastic company, and I think they're going to be all right. They're one of my favorite companies in the stock market. They have one of the best balance sheets of any company. They have virtually no debt. So you really don't get better than Google. They're a fantastic company, guys. Something to take a look at, guys. Do your research on this company. If you like the numbers, you see the potential. It's a great buy at a 17 price to earnings, so definitely a good company. Now we have Microsoft. Microsoft is the second biggest US publicly traded company. They are worth over $1 trillion, over $2 trillion. So you can see this company is a massive company, and their profit is massive as well. Now, unlike Google, Microsoft actually beat on the top and bottom lines. They beat the top and the bottom lines in revenue and earnings per share. When you look at it, you can see on the earnings, they did 2.35 versus 2.30. So it's a beat on earnings. They did $50 billion in revenue versus 49. So that's a beat on that one as well. One of the real key reasons why they didn't do so hot was because of their guidance. They did guide lower than what analysts were expecting. When you look right here, Microsoft guided between $52 billion and $53 billion when analysts were expecting around $56 billion. So as you can see, they're guiding lower than what analysts expect. And that's usually not a good sign, but I personally do like this. I think Microsoft is playing it safe, right? The biggest thing is one thing that I do like is I like when companies lowball their numbers and then blow them out, right? I think it's like you lowball, you get all the pressure on you now, you got the expectations low, and then you can kind of blow them out the water. So I think this is a right move by Microsoft by lowballing them, even if they do think they can hit the $56 billion, but they hit you at hey you do 52 to 53 billion in revenue, and then kind of see it from there. Another reason why this is because of Azura. Azura, their cloud business actually, first of all, it grew. So I do want to state that it did grow by 35%, but analysts were expecting around 36%. So we're talking about a 1.4 difference in growth. And Azure is the second biggest cloud computing behind Microsoft. When you look at when we talked about Google earlier, Google grew their business, their cloud business, from $5 billion to $6.6 billion, where Microsoft grew their revenue was $20.33 billion in the quarter. So as you can see, they did a phenomenal job. They did 20.33. Analysts were expecting 20.36, so a slight miss on it. That is up 35% year over year. So Microsoft is another one of those companies that's doing a fantastic job. One of those big tech companies that I personally think people are overreacting to when it comes to this. You're talking about a company that beat on the top and bottom lines. We're talking about a company that grew their cloud computing business by over 35%. Yes, it was lower than analysts expectations, but it is still a growth of 35%. That is nothing to sneeze at. That is nothing to sneeze at. They are closing that gap between them and Amazon in a big way. So Microsoft, fantastic company. They're the second biggest company in the world for a reason. Second biggest company in the U.S. for a reason. They're doing a fantastic job. When we look at the results, we can see though that the market kind of reacted negative to them. Right? They're down 7%, almost 8% in one day. Just like Google, this is one of the biggest one-day drops I have personally ever seen on Microsoft. Microsoft rarely dips. Microsoft does not dip a lot. If you were to look up a chart of the times Microsoft have dipped, you're not going to find over the last 5 years, you're not going to find a lot of times where Microsoft has dipped. So Microsoft is a very stable company, very good company that doesn't really go on discount. So you're looking at a 7% drop in one day. I can't personally think of another time that I've seen that. Now Microsoft is even getting closer to their 52-week low. 52-week low of $219 are currently at 231. So they're getting closer and closer to that 52-week low. They got a PE ratio of around 24. So they're right around the market. So I personally think that Microsoft is a hold. I wouldn't say it's necessarily a buy right now. So Microsoft is on two parts to me. One, I think it's a buy for the simple fact that it rarely goes on sale. We're talking about a company that they average around $50 billion yearly in revenue. So we're talking about $50 billion in profit almost every year. So we're talking about a very profitable company, a very, very stable company, and they have that SaaS business model where they have subscriptions and they have constant revenues over and over again. Microsoft has been around for a very long time. They're going to be here even more for an even longer time. Microsoft is a very good business, but when it comes to it, I do think that Microsoft is fairly priced. I think that Google is underpriced, and I think that Microsoft is fairly priced. What I mean by that is Google is trading at a 17 PE ratio, where you got Microsoft at a 24 PE ratio. But I will say, Microsoft does pay a small dividend, so something to keep in mind. But most importantly, is that they're they're one of the biggest companies in the world for a reason. They have a tremendous business model. They're one of the best companies in the world. You can't really go wrong with them. And then on top of that, they rarely ever dip. You do not see dips in Microsoft. It just doesn't happen. So it could be a buying opportunity right here at these prices. It's up to you guys to make that judgment, guys. But next, we're going to talk about Facebook. Meta, my bad. All right. So when it comes to Meta or Facebook, um, they had another disappointing earning. As you can see, this is their second decline in revenue and profit year over year. This is their second straight quarter of negative decline, of revenue decline. Then, to top it off, their Reality Labs division, which is basically their metaverse business, lost over $9 billion, almost $10 billion. That is one of the key reasons why the stock had just plummeted, right? When we take a little deep dive into the numbers, you can see a couple of things. One, earnings per share. Analysts earnings per share. Facebook did 1.64 versus 1.89 expected, so they had a really big miss right there. You got revenue at 27.7 billion versus 27.38 billion. So the good thing about that is they did beat on revenue. So they missed on profit, but beat on revenue. Daily active users of 1.98 billion versus 1.98 billion, so right in line. You got monthly active users of 2.96 billion versus 2.94 billion. So they did beat on that, but their active revenue per user did 9.41 versus 9.83. So they are making less money per user. And one of the key things for this, obviously, is advertisement. We've talked about that. Talked about it with Snapchat. We've also talked about it with Google. Advertisers are not spending money right now. Advertisers are not buying ads, right? A lot of companies are holding back to kind of see what's going to happen with the economy, what's going on with inflation, what's going on with interest rates. There's so much going on in the economy right now that people just aren't advertising, right? And the key thing about this is Facebook makes majority, almost all of their revenue from advertisers. So the fact that people aren't advertising like they normally would, this is really taking a toll on the business. Then something to keep in mind, if you guys have an iPhone, you know that Apple about a year ago did a piracy update where they allow you where they allow its users to not share their data with companies like Facebook. So because of that, Facebook can't advertise as good as they normally would. Normally, say if you looked at something on Dragon Ball Z, they would track that and then they would use that to act to promote ads about Dragon Ball Z to you. Now they can't do that, right? Users have the ability to turn that off, so that's affecting their advertisement and hurting their business. That's one of the key reasons on why they've been struggling in about the last year. They've been struggling a lot. Then to top it off, you have the metaverse, right? They lost, let's just say $10 billion. They lost $10 billion so far, and they've already said that they plan on losing even more next year, significantly more next year. So this is one of the key reasons why they're down so much, right? They're not making as much money as they used to, right? Their margins are down because advertisers aren't really advertising. Then on top of that, they said, "Hey, we've lost like $10 billion so far for the year, and we plan on losing even more next year." Right? So that is something to keep in mind, but if the metaverse ends up paying out, if it ends up going as they expect it to go, you are looking at a business that Mark Zuckerberg has said can be worth $3 trillion, right? So if it plans out well and they execute it well, this could be a very profitable business. But Facebook or Meta, they are the front runners for this. They are one of the companies that's leading the charge for this, putting the most money in this, trying to develop this metaverse. And it's not looking good. Something to keep in mind is the stock is heavily down in after hours. They're down 20% in after hours. They are down a massive 20% in after hours. So they have really gone down, and they're gonna as tomorrow morning when they open up, or today, they're gonna open up maybe even less than $100. I haven't seen Facebook that low in a while. I remember I was reading one article. They said this is the lowest Facebook has been since March 2016. The lowest Facebook has been since March 2016. That is incredible. That is lower than what they were even during the pandemic in 2020. So you are catching Facebook at a very, very cheap price right now. Talked about PE ratios of all the other companies when it came to Google and Microsoft, and you can see the PE ratio of Facebook is 10. Facebook is trading as if it's a value stock. Facebook is trading as if it is a company with no growth at all. That's how Facebook is trading. I never in a million years would have ever thought I see Facebook trading at a 10 PE ratio. That is incredible. This company is extremely cheap. This company's pennies on the dollar. Once again, do I believe Facebook will be here 10 years from now? I do. Do I believe Facebook will grow than what they are now? I do. But the thing about Facebook, I said this in a previous video, that they are losing money big time. What I mean by losing money, Facebook is still profitable. So something to keep in mind, Facebook is still a very profitable business, one of the most profitable business out there. But they're using a lot of that profit to fund the metaverse. And they're losing money on that. They're not making any money for that. And they have came out and said that they're not going to make any money anytime soon. Don't expect profits from that anytime soon. But they're using that to lay the groundwork for what they believe will become a $3 trillion business. Now, it is yet to be seen. They're pouring a lot of money into this. They're going to pour even more money into this. We're probably looking at them pouring I want to say over the next 5 years, up to 50 billion, 30 to 50 billion dollars into the metaverse. So the thing is, if this plays out, if the metaverse plays out the way that they expect, you're looking at a company that is going to soar to the moon. Facebook, Meta will soar to the moon. But if it doesn't pan out and they've invested so much money into this, it's not going to be a good look, right? So it is something to keep in mind, guys. I think out of all the companies that we've talked about today, out of Alphabet, out of Microsoft and Meta, I think Meta has the most potential. Meta's the cheapest of all the companies, but I also believe that Meta has the most potential. But then I believe they also have the most risk, right? If the metaverse pans out, you're looking at a business that is just going to go to the moon, like I say. If this doesn't pan out, you're looking at a company that could go down or be stale for a while. So only time will tell. Me personally, I am looking into Meta. I am interested in Meta. I'm interested in all the companies that we looked at today. Microsoft I think Microsoft had the best earnings out of all of them, right? They had beats on the top and bottom line. They barely missed on their Azure cloud business, so it wasn't even a big miss, but they barely missed on that. Then on top of that, they did forecast lower than expected, but the numbers were still good. So I think Microsoft had the best earnings. If I were to rank them, I think it's Microsoft. Then I think it's Google. They didn't miss on the top and bottom line, but they were very small misses. They grew their cloud business, so that's always a good sign. So they're doing a lot of the big things. And then on top of that, they're being hit with the same problem as everybody else when it comes to companies that rely on advertisers. They're being hit by lower advertisers, right? Advertisers aren't buying ads like they normally would. So that is something to keep in mind, but that's something everybody's being affected about. As we've heard Snapchat talk about that, we've heard Google talk about that, and now we've heard Meta talk about that. So you got a lot of big players that are being affected by that. That's why their business is down. And then you have Meta, who's been down the last couple of quarters, but then they're spending so much money on this metaverse, and we really don't know how it's going to turn out, right? I think the metaverse is going to be the future. I really do believe that. I think that's the next big step in technology. The next big leap is going to be virtual reality. But who leads that charge? We don't know yet, right? But Meta is investing so much money into it that they're trying to be the ones that lead that charge. But only time will tell, guys. Once again, guys, thank you for watching the video. I do appreciate it if you can like, comment. It really helps out the channel. Subscribe as well, guys. Thank you for watching. You guys have a nice day, and I'll see you next time. Bye-bye.